Good morning, everyone. Very warm welcome to all the participants to the fifth live session of IMP. I am Natasha Surani, your host for today. Today's session is going to be extremely important as we dive into fundamental analysis. Before we begin, keep a pen and a notebook handy to jot down important points. We will have three short breaks at 10 a.m., 11 a.m., and 12 p.m. Now, let's get started with today's session. Without further ado, it is my pleasure to invite Dr. Ram sir to take the session forward. Over to you, sir.
Thank you very much. Thank you very much for joining this session. Thank you, your family members. Thank you, your staff and hospital colleagues who are allowing you to spare some time. Live instructions, as you already given by the admin. Disclaimer is this is purely educational purpose. You don't think this as an investment advice. Don't buy the stocks which we are going to discuss. Discussion is practical oriented. It is not completely theory. Metaphors are used for only discussion purpose. We show this again and again because sometimes judge within us become active and try to judge things rather than student. You have joined as a student, so learn as much as possible. Second thing is that we always tend to focus on the what is not there, as we say that in the donut hole phenomena. Don't focus what is not covered. Focus on the donut ring, what is covered. There are thousands of things in finance which can be discussed, but everything is not relevant for this course. Again, this questions comes to the adult mind that why I am learning, why I am learning what I am learning, or what is the practical application of this. More often than not, practical application seems to the question that how this information is going to make me how this information will help me to make more money. Sometimes we cannot connect dots immediately. We can connect dots later on. Information can be basic foundation, it can be applied directly, or sometimes it's just confidence building exercise. So just because you cannot connect dots directly with the money making does not mean this information is not important. I don't have time to waste, I don't have time to discuss which is not relevant. Okay, so we'll focus only on relevant. So don't bother about that, we are wasting your time. This strategy we discussed several times. There are three strategies at WealthCon. One is passive investing, other is swing trading, active investing. Passive investing is exclusively done in the ETF and mutual fund, and active investing and swing trading can be done in the shares. So passive investing, I recommend every one of you, 100% people should do passive investing because timing is not required. Minimal market tracking is necessary. So passive investing, I hope you will be able to do by the end of the course. We have already posted step 1 course videos. You watch that. In addition to that, we will make some few fresh videos and we'll take one separate session for the passive investing as well. So when this course is over after 1 month, I'm sure that 100% of the scholars will be able to do it. And most of you will be able to do it, active investing and swing trading. Okay, so if you, for time tracking or how much time you have to give to the market tracking is here, it's minimal, it is moderate, and it is little more in the swing trading. So you decide which food you want to take. We have given complete thali to you, you decide which is suitable to you. These skills are required for investor. These are 5 skills of investor. One is selection skill, timing skill, mind management, money management, risk management. Then logistics skills. Logistics skill are depend upon each country, each broker. So you'll have to little more proactive to understand the broker's platform. We won't be able to discuss all platform. We have already discussed the Zerodha related information and posted videos on the web LMS. We also repeatedly saying that this is the cycle of radio, that is research, that is input of the information, then analysis, then decision making, execution, monitoring of portfolio, again booking the profit or uh, portfolio rebalancing, and this process keeps on going. So this we can say cycle of wealth creation. The cycle creates wealth over the long period of time. With this brief introduction, uh, let's go to the today's discussion. Today's agenda is uh, very simple and straightforward and focused as well. It is company analysis. My questions, my question to you is: can you write the names of company you are aware and you use the product since you wake up at a full day? Write the names of company in the chat box, and thereafter, after the live session, you write these names in the G10 group as well, because you already know at least 100 names of the companies you use the products of those companies. When you wake up, first you look for toothbrush, toothpaste, soap, then food, then tea, coffee, car, bank, petrol, uh, and so many beauty products. Okay, so many. Okay, suppose if you go to the market for grocery shopping and you pick up any product and you come to know that there is name written behind that label of, and you want to do the analysis of that company. How are you going to do it from the investor perspective? Okay, so we'll focus only on the company, and it will be, we call this as a bottom up approach. In a top down approach, what happens, we start with the economic country, and then you go to find the industries. So let's say this is India, then sectors, uh, 15 to 20 sectors, then again there are industries, and then company. This is how you go from top down. But today I'll focus only on the company analysis. Okay, and today PPT is very small. We'll have more practical demo and more interactive session where you are going to write in the chat. I'm going to ask the question. You don't ask question, I will ask question. You will answer it. Sometime you have doubts, so I recommend to get active in the G10 group. Your doubts will be solved. Okay. So let's start with the stock market, connection of stock market and human being. Now the Homo sapien is a species. It's among the other species, millions of species, who has dominated the entire earth and even now trying to dominate the space as well. So most of our activities, social activities, economical activity, people activities, revolve around the human being. Human being. We are at the center. Previously, people used to consider as universe is a geocentric, that is, universe is rotating around the earth. Then Kepler and Copernicus said that no, it is a heliocentric, that is, universe is rotating around the sun. And recently, last 200 years, now it has become homocentric. That means sapien centric, that we consider entire universe is revolving around Homo sapien. We try to dominate nature and everything. So this, on one end it is a human needs, other end is the, when we trade and place the order on the stock market, what we buy is symbol of company on the stock exchange. So that symbol will be reflected in your demat account. When you sell against symbol, you get the money. It is basically you are buying the symbol. But that symbol represent something. That symbol represent share or ownership right in the company. We are going to discuss what exactly company means. But it is the ownership right. you are the owner of that company. You not be having 100%, but maybe fractional ownership. And that ownership is of company. Now, company is an organization. Okay. Can you know the types of organization in the chat box? One is a commercial organization. Other can be government organization. Government is also organization. Non-government organization like social NGOs. Then political party is also organization. Another cricket association is also organization. Medical association is also organization. The structure of organization can be different, objective can be different, but it is an organization of the people who do some sort of task. Company, which is commercial company, produce some products, goods and services in exchange of money. And these goods and services are produced to cater human needs. What are the human needs? Human needs are in a pyramid. We can say basic human needs are survival. Survival. So, what are the needs for the survival? Can you write in the chat box? Most important is food. So, write in the your notebook food. Write 2 3 companies which make food. These are the essential. Then health related is also survival. Then next is relief. Relief means relief from the pain. So health will be in the basically relief. Survival be food, home related. Okay, roti kapda makan, food, home, cloth. So the company is working on that. Then home related, then health related. Okay, it is to relieve the pain. Insurance is to relieve the pain or fear. Then next category is enjoyment. Then companies which provide the products related to the enjoyment. Now even people say that you can people buy products just to get the enjoy. Then next is egotistical needs. So car and products of prestige are sold to cater the egotistical need. Maybe there is a need of transportation, but significant part of car in India is egotistical need, where people wants to show up and it is a statistic. Then it's growth related, where you can have personal growth or business growth. And then altruism. Okay, altruism is selfless service to community. So religious so organization provide these services in and they in exchange you give the payment or fees. They call this as a donation, but it is essentially fees for the service of altruism. Egotistical. So every even religious organization provide the human needs only, either altruism, ego. They have the entertainment program, enjoy. They can provide mental reliefs and few things. Okay, now let's understand company. What is company? Company is an organization. The way any animal is born, organism is born, similarly company is born, and this is the birth certificate of company. It is called as certificate of incorporation, birth certificate. It is issued by the government. It has the CIN number, that is company identification number, and date of the corporation, then address of the corporation, address of the promoter or registration. So usually someone who has a entrepreneurial itch or he wants to start a company, he or she register the company. When I say he, it means she as well. It is not gender bias because it is a trend. We cannot say every time he or she, it will add this additional burden. So otherwise, feminists will start protesting, "Arey, aisa kaise ho, sir, is gender bias." He uh, or she start company. Then let's say here. Now the Basanti after Sholay is or in the Sholay, Basanti wants to start a company, let's say Basanti Transport Limited, private limited. Initially, it's a private limited. In a private limited, you cannot have more than 200 shareholder, 200 members. In limited company, there can be many. So understand the difference between private limited and limited. And third entity is public limited. So Basanti Transport initially it is a private limited, private entity. Minimum two investor or two director are required. And when you go to public, it becomes limited only. And when you list on the public, it becomes public limited. So let's say Basanti started private limited. Now she needs funds for investing, so she approach her known friends or known people, and they give her funds as an investor, and Basanti gives some shares, let's say 10% shares to each one. These are called as angel investor. So what angel investor do? They give funds and buy the some shares and give funding to the promoter. As business expands, and Basanti wants to expand transport business throughout the country, so she will approach to the some venture capitalist. Let's say Gabbar Private Equity. Gabbar Private Equity Fund is a venture capitalist. So venture capitalists do little more stringent analysis of company, and they do the valuation and they give funding. So this is where fundamental analysis come into picture. Private equity. After 3 4 years, business increased significantly. Now this venture capitalists want to exit. Let's say he invested 100 crores at the beginning, so he wants to exit. So how he will exit? Either some venture capitalist will come, or it will go to the public. So then Basanti decide to list the company where other public will invest it, and this all Gaon people like retailers will take the part of the company. So in that case, initially, let's say initially Basanti had 100% share, but after giving them 10 each, Basanti has 70%. Even after giving 10% to him, Basanti has 60%. So at the time of IPO, write down, this is called as IPO, initial public offering. Okay, IPO are of two types. One is called as offer for sale and offer for fresh issue of shares. What is offer for sale? Suppose these people want to exit and they are selling. It is called as offer for sale. And fresh issue means company is issuing additional shares, and this fresh issue shares money will go to the company. So this retailer buys this, both will combine as together as a IPO. Initially, offer for sale will be executed, and this previous investor will exit, and new people will come. For example, this company says that all four are exiting. In addition to that, Basant is also selling 10%, 10% her share stake. So after IPO, what will happen? Basanti has 50% stake and public has 50% stake. All these are exited because they handed over shares to these people, and Basanti also sold 10% to make money. This is how it happens. This process is called as primary market. Okay, right on. Primary market is the selling of equity or shares directly to the shareholder. Companies sell directly to the shareholder. It is called as primary, and then it will be listed on the stock exchange. Then these people will buy and sell among each other. That is called as secondary market. NSE BSE is called as secondary market. Okay, so after the listing, if stock prices goes up and investors sell by amongst each other, company will not get anything from that transaction. Company gets money only when at the time of IPO. Okay, if issues fresh share, company will get money. If it is offer for sale, this people will get the money. Write down, company does not get money from the transaction in secondary market. You may ask, why do company do the listing? Number one is to exit the old investor. That is the number one reason for all IPO, because these people want to exit some or other day. Second, company wants to get the raise the funds. How they will raise the funds? Can you write in the chat box now? I used one word. Write that keyword. Because when you do IPO analysis, you have to understand these two keywords. One is offer for sale, and other is fresh issue. Fresh issue of shares. Then only company gets the money. Be aware that company is a separate entity. It is separate from the promoter. It is separate from the shareholder. It is separate from the everyone. Company is a separate entity. Third reason, listed company have more prestige or credibility. Credibility. Credibility to the customer, credibility to the employees, credibility to the bankers. People will trust more to the with the trusted companies, with the listed companies. Okay, these are the three main reasons of listing. So you understood the IPO process. Okay, uh, if you find the data on the Google, how many companies are there are around 20,000 active company, 20,000 active companies in the stock market. Most of them are very small and private limited company. And out of 20,000, there are hardly 7,000 which are listed. And out of that 7,000, hardly 1,000 companies are doing real business or good business. Rest are very small or not doing good business as well. So if you see that when this is a registration, every year lakhs of companies get registered, but 90% of the companies die within 1 year. So infant mortality rate is very high in company. 90% of the company die within 1 year, because people promoter get we say itching of that I want to become a businessman industrialist, but reality hits immediately within 1 year. 90% goes down, and then remaining 10% keep doing business and struggling, uh, and they will have less than 10% employees. Okay, 10 not 10%, 10 people, so less than 10 employee. So 99% of the companies will either have less than either die single owner company, he is the only person or only 2 3 person, or less than 10. Very few company, maybe 1% companies goes to beyond 10, 20 employees. Those become little, they have aspirations. Otherwise, people are just doing the company registration, and only point one come to the stock market. Okay. So you understood in a brief the process of company formation to the listing. You don't have to go to nitty gritty how it listing done. There are a lot of drama behind it. But since we are not dealing into the IPO, so it is a theoretical discussion which you can read on Google, or even zero the articles give the entire things of IPO listing. We mainly focus on the listed company. So company is formed, Basanti Private Limited is formed, created. Now consider company as a fish, and fish has to survive in ecosystem. So what is the ecosystem? There are the supplier. Supplier means raw material, some goods, and there are labor suppliers as well. This is at the center company. Company get the raw material. I'll write M. Material, material cost. Then manpower. So even manpower means labor. Even employee, we can say it's a supplier. Then money. There are lender who supply the money. So then we company buy the land or asset or plants, machine. Let's put a machine. And then manager. Manager is a company. So when all these M come together, these are suppliers. Company do the some processing and create a product and sell to the customer, product or services. Customer. So left to right, supplier, company, and customer. This is the easy life. But uh, life is not that easy. There is always someone there to trouble. So these are troubler, competitors, trouble on one side, and compliance officer. That means Babu government do the lot of troubles by creating hurdles to doing the business. Okay, ease of doing business is not that much as good in India. So compliance officers create hurdles, competitors create hurdle. So this is an ecosystem of company. We have company has to survive. So supplier, competitor, compliance officer, customer. When you read the industry analysis, you will come across one term called as Michael Porter's five forces. How many of you have heard this concept, Michael Porter's five forces of company? I modified them into simple. When we talk about market, market is not just about customer, it is about competitor. Let's say you start hospital. So market of hospital consists of the patients and other hospitals. You always think about two entities, and definitely these troublers as well. So this are always there. So how this competitor uh, try to trouble? They compete with the supplier to take the supplier, increase the rate. They can compete with the customer. They can competitors can reduce their prices. Here they can increase the prices. So these are your cost. These are revenue. You miss company. So competitor can trouble you on two ways. One is they can reduce the cost of the market prices of goods, so your revenue goes down. They can increase the supplier's cost by giving more money, more amount, and cost can increase. So competitors can affect your top line as well as mid line. So that is called as competitors force. Compliance increase your cost. Customer try to reduce, try to ask discount, so that reduce your uh, top line. So in a business, things are as such very simple in profit loss statement. I have mentioned in the video, it is a top line, it is a middle line, and bottom line or bottom line. That's it. Once you understand that these are three lines, everything becomes very clear. Things affect, either it affects top line or middle line, and bottom line is just a calculation. Okay, this is a revenue line, and this is all expenses. Top line is limited, one or two lines. Middle lines are hundreds of lines. This is a company ecosystem where companies survive. When you do the industry analysis, you have to understand this ecosystem. Whether buyers are supply, whether its suppliers are strong, whether buyers are strong, whether competitors strong, whether compliance is troublesome. So remember this image. It's very beautiful image I created for the company analysis. Let's talk about organization. Why I'm taking this basic directly, because when you try to connect dot, these things matters a lot in analysis. When you read the annual report, these things matter. When you read the annual report, you will see that who are the customers of that company, who are the competitors of that company, who are the supplier, and whether company business is depend upon a lot of pricing or competition. So these things matter. Let's talk about organization. When we say organization, there are insider, then there are outsider. Okay, insider, we will say that there are the owners, who are shareholder. There can be board of director, managers, and employee. These are the people. Managers can be CEO, chief executive officer, CFO, chief financial, CTO, chief technology officer, and so on. Board of director represent the shareholder. Okay, so this is a segregation of power. So in a single owner company, he is the manager, he is the owner, he is the board of director, his wife is board of director, and he is the manager. Sometimes he is the only employee. But in a public listed company, the roles are segregated. It's like in democracy, roles is segregated. Parliament is a separate rule making, rule interpretation is in Supreme Court, government is executive body. This is separation of power, so things get stable. Because if everything is in hand of one person, if you check out bytes, then system gets collapsed. That's why it's a diversified. Company is a separate entity which is eternal, right? The company is eternal. Company is eternal. Company dies when certificate is cancelled. It is a strike off. Okay, so if you search our one of the company I registered in 2016, Radiscan Radisson Healthcare Private Limited. Now it is a strike off, because I created, and within 1 year I understood that it will not go further. So strike off is the death of company. And then outsiders are lenders, vendors, supplier, distributor, customer, government, society. These are the stakeholder. So this organization has to take care of all the stakeholders. Okay. Now, what are the activities of company? This is where you start understanding the company analysis. Company do multiple activities. One is producing or supplying the goods and services. So it may have raw material, it may produce, especially in manufacturing, or sell goods. When we talk about goods, it includes services as well. For example, hospital. Let's talk about hospital is the company. Okay, so you take the medicine from the pharma company, you buy some machines from the medical equipment, you hire some employees, you take money from the bank loan, and what you provide is the medical service. Medical service are then again multiple dividers: OPD, IPD, surgical, medicine, this rehabilitation, and so on. This is a service, but you are getting all the raw material from the suppliers, converting to the service. Okay, so these are where customers, suppliers to customers. This is the business related or production activity. So one leg of company is goods or services going out to the customer. Other leg is money coming from the customers. So these two legs are extremely important in a business transaction. If money is not coming, then it is charity. If only goods and services going, money is not coming, it is charity, free of cost. But business entity, these two legs are always there. Whether money is come in advance, immediately, or later on, that is a revenue recognition or money recognition, but it will happen. So first activity, you understand the production and sales of goods. Second activity is a financial activity. You have to understand the financial activities. So what are the financial activity? One part is in a business, one part is selling the goods services, other part is collecting the money. Okay, money or financial activities. Financial activities, we receipt money from the customer. It is called as a receipt of money, not receipt. Receipt is also, receipt is the voucher, but receipt, receiving the money. Then company can purchase uh, raw material or goods for the selling. So that can be done by either cash sale, that cash buy and sell, that means immediate money transfer. Okay, it is called as cash. Cash means not currency, cash means even bank transfer. Sometime, so let's say you are a hospital owner. Patient pay bill to immediately. That is a, we say, cash receipt. If patient has the insurance, you are not getting immediate cash. You will getting after 1 month. So that was a credit sale. So you sold the service on the credit. It is called as credit sale. This is a cash sale. Understand these two difference, because in a profit loss statement, sometime company may show increase the revenue, but it may show fake revenue by just showing that they have sold or selling on credit. Okay, so is this differentiation clear, that credit sale and cash sale? Credit sales means you sell the service or goods now, but you receive money later on. Okay, so if you sell the service now and money receiving later on, it is mentioned in the balance sheet as a receivable. So if you provide service under the yojana and if money comes after 6 months, so this money will be mentioned on the receivable. So what you have to see that in a, this is the Asian Paints. This is a profit and loss. Okay, this is the revenue, and what you have to see in the revenue, again go and the one entry called as receivable. Okay, trade receivable. So write down this trade receivable are the credit sale. That means they sold the goods but money is not received, and the revenue is a total. Which includes cash and credit. What things you can interpret from here, that receivable is a credit sale, and revenue is both sale. If promoter wants to manipulate revenue, how he can show? And there are people doing as well. What they do, they say that in March, send all goods to the customer distributor, and they say that you show as a bot, and in April you again refund back. That means as soon as goods transfer from Asian company to distributor, Asian company will show as a receipt, as a revenue in the March ending, and distributor will send back that goods to again is in the April, that it is returned. And now this entry will go into the next year. So this is one thing you have to look for, the pattern of receivable. Okay, and you can find out Cox and King का क्या है. So Cox and King, you might have heard the word. It was very popular company, and you see that it was showing profit. This is sales is revenue. Okay, so sales was increasing every year. Okay, fantastic, up to 2016 or March 2017. Okay, see this. But if you go down and check the receivable, see the receivable was phenomenally increasing. Okay, so what company was showing, although revenue is rising, but actually it was a credit sale which was not realized. It might be fake interest. That's the one thing you learn in today in this understanding, that credit sale and cash, credit sale, cash sale, revenue includes both, and the credit sale will go to the receivable entry on the balance sheet. These are the financing activities. Uh, to understand the financing activity, we have to understand the financial statement. One is a profit loss statement, one is balance sheet statement, third is cash flow statement, and recently equity statement, change in equity statement. Okay, these three are popular. We'll discuss this again. Already discussed in assignment videos, but when we do analysis, we'll discuss this again. Financial activities are collecting the payment, making the payments, debt financing, where a company can take the loan, it can sell the bond and collect the money. Equity financing means sale of the shares, collect the money. Capex investing, that means company can buy plants and machinery. Asset investing, company can invest into the asset which are not related to operational. Let's say company buys in mutual fund. For example, Zomato is buying in mutual fund, which is not related to this. So asset investing, the way we invest into the grade, company can also invest into the grade equity of other companies. Okay, it can invest into the debt mutual fund. They are doing it. So this is not operational investing. This capex is required for the operational, and capex will show sometime a depreciation. So difference between capex investing, that is capital expenditure, and asset investing, that capex will be shown as an expense later on. Asset investing is appreciating asset, they will make a profit. So understand the difference, capex investing and asset investing. So when we buy the car, it will be shown as an asset under our balance sheet. Is it depreciating asset or appreciating asset? Can you write it in the chat box? It is a depreciating asset. That means it is a capital expenditure. If you buy mutual fund, it will be shown as asset in the balance sheet. So both are shown asset by the accountant, but there is one difference. One asset is depreciating, one asset is appreciating. So asset, you have to identify whether it is appreciating or depreciating in a company as well as our own. Okay. These are activities company is doing in the financial segment. Then company make a tax payment. GST and income tax, and there are other taxes. So these are the financial activities. These are done by the accountant and financial officer. These are done by the production manager. So there are people who are MBA in finance, MBA in HR. They are posted here to conduct business activity. MBA HR, MBA production, MBA logistics, MBA supply chain management, and so on. And MBA finance people do these things. Okay, so I did my MBA finance, let's say 1 year ago. I learned all these things. Third activity company does is a corporate action. Okay, corporate actions are focused on the equity in a balance sheet. There are equity is one area. Let's write a balance sheet here. How balance sheet like? Equity, debt, that is non-current debt, and we say other liabilities on one side. Here assets, okay, which will be non-current asset and current asset. So activities of this segment are called as corporate action. These activities are related to the profit loss statement. Okay, this activity is related to the this segment here. Okay, the corporate actions. This is a balance sheet look like this. This is the right, left side, left side, right side, left side, right side. So activities in this equity segment is called as corporate actions. And this will seen in the equity statement, change in equity statement. What are the corporate actions? Dividend, bonus shares, buyback, IPO, that is a fresh issue, IPO, and FPO, follow up share, follow up public offering. Suppose company issued IPO, it got listed, it sold shares, fresh issue. Company wants more capital, it can issue another issue called as follow public offer. So these are done with the permission of SEBI, stock exchange, and all the things. Government follow up affair, not affair, follow up offer of again fresh issue directly to the public. Sometimes company can sell directly into the stock market fresh issue, but usually this is how they do it. Okay, company can uh, issue the bonus shares. These are also again fresh shares. Bonus shares means they issue the to the previous shareholder. If you have one share and company issues 1 to 1, that means if you have one share, you will get additional one share, bonus extra share. Company can have right issue. Right issue means the shareholder will have an opportunity to buy shares at little discounted price. So this is again fresh issue. Company can have the private placement. Company can sell to the this selected people privately. That is also called as private placement. Company can have ESOP. What is ESOP? That is employee stock option placement. So this is also fresh shares. Company do merger and acquisition. So what is here? Companies extensively working on selling the shares to raise the capital. Here company is focusing on selling the goods. In a personal finance, we can make money only by selling services, good, or at the most investment. You cannot make money by selling the shares. So company is lucky that even if you see company does not get money from customer, they get money from the investor by selling the shares. Now you may ask question, How company can sell the issue fresh share? Is there any restriction? And how? What is the process? The fresh issue share process is very simple. You just have to create the documents, board meetings, and some documents, and issue the fresh shares. If listed company, it will go to the SEBI and all. But what it is very simple. No one is restricting. However, there are constraints. Company cannot sell shares infinitely, create sell shares and infinitely, because what will be the constraint? The only restriction, an important restriction, is buyer. Company is ready to sell n number of shares, but should be buyer. What will happen if company increase unlimited of shares, increasing, the price will go down, go down, and eventually there won't be buyer. That is number one constraint. Second, the existing shareholder, because if fresh shares are sold, there is the dilution of the previous shareholding. Suppose you promoter has a 50% shareholder, and if fresh shares are issued, his percentage will go down. So promoter himself will say, no, I don't want to reduce my proportion. So existing shareholder will not allow to sell the unlimited number of shares. So second restriction, there should be buyer. People will not buy just because of the company is selling. That is one. Second, existing shareholder will not allow, because they are the owner. If company keeps selling money and their stake is diluted, then why they will allow? They will allow only if the money which is taken from money which is raised by selling the share is deployed in the businesses and their value is going up. So even of proportion of existing shareholder is going down, their share value is increasing. That's the only case they will allow it. Okay. And thirdly, government will also have restriction that is a unlimited Ponzi scheme. They will not be allowed. So let's say see how companies sell the shares. This is a Reliance Industry. Go to the balance sheet. This numbers in crores. Okay. The equity face value of Reliance is 10 rupees. So equity capital is equal to, it is also share capital. So how many shares were there? These numbers in crore. In 2014, जब मोदी जी आए तब रिलायंस के शेयर्स कितने थे? आउटस्टैंडिंग शेयर्स कैन यू राइट इन द चैट बॉक्स? 294. 10 rupees is a face value. So this is a face value into number of shares. So 294 crores shares were of Reliance. So you remember this number. मोदी जी आए तो 294 शेयर्स थे रिलायंस की. अजी अभी कितने हैं? 1353. That means almost 4 times. Okay, correct. 4 times. 4 times Reliance shares are increased. So Reliance continuously getting money from the investor as well by private placement, right issue, and so on. So let's check in the financing activity and find out what happened. So this, when companies sell the shares, you will see entry in the equity capital where number of shares will increase, and you will see another entry that money is coming from the fresh issue in the company. Okay, in March in the 2024, raised 20,000 crore from the shareholder. So check this line, proceed from shares. When you do the financial analysis, check this line, whether company is getting money from the selling fresh share. This is a fresh shares. If it is offer for sale shares, it will not be reflected because it will money will go to that particular investor, not the company. So whether it is right or wrong, it depends upon scenario. What Reliance is doing, Reliance people are very smart. One more thing you will see again interesting here only in the go to the promoter and see the promoter holding. That is a money familiarity. Almost 50%. So even they are selling shares. Ambani family also buying shares. So their promoter shareholding is not going down. So what they do, they focus on increasing the market capitalization of company. Market capitalization is the product of price of shares and number of shares. What Adani did for 3 4 years before Hindenburg, what Adani was doing, whether he was doing or what has happened, that market cap of Adani companies was going up because of increasing the prices. And when price goes up, P value becomes very high, and other people like Hindenburg's target such company that there is something wrong. So what Reliance does not allow price to increase very high. As soon as price started increasing, they issue fresh shares. So price is controlled. So Reliance price is increased slowly, because if price started going up, they come with the fresh shares and the supply, because eventually price is the demand supply. They buy shares, including Ambani and others as well, and the price is controlled. So shares also goes up, market capital also go up. What happens if price suddenly drops down? Promoter start buying the shares. So what is the case of Reliance? They will not allow share price to give you 100% return 1 year. Okay, and this is not manipulation. This is a legal way. Okay, so you can see that in 2016 it was 200, but it is not phenomenally increased. Let's say in 10 years, slowly increasing, or even last 5 years it is not increasing. Let's say 3 years. Okay, price is not increasing too much because they keep selling the shares, but market capitalization is increasing. It has gone significantly from 2014 to this date. Okay, so here we were discussing corporate actions, that is they issue bonus shares.